Donald Trump is tapping into his populist rhetoric salesman side and demanding that credit card companies cap their rates at 10%.
Well, then they're in violation of the law. Very severe things. No, I want a cap on credit card interest rates because some of them are 28, almost 30%, and that the people don't know they're paying 30%. The people out there, they're working and they have no idea that they're paying 30%. No way. We're putting a 1-year cap at 10%, and that's it. They know it. They've really abused the public. The credit card companies have totally abused it. I'm not going to let it happen.
So Donald Trump says the credit card companies will be in violation of the law. However, there is no legislation currently to enforce this. But I have no doubt he would have any trouble getting bipartisan agreement on the matter, considering there's been previous proposed legislation in both the House and Senate. He then also says he thinks borrowers don't know they're paying such high interest rates on their credit card debt. So Trump thinks everyone with high credit card debt is really stupid. Or I guess I'm stupid for expecting that people should understand their risk and responsibility when it comes to borrowing. Donald Trump is proposing that credit card companies cap their interest rates at 10% for 1 year. Now, how does Trump or the government or anyone else know what the rate should be? How do they assess the cost of the risk? Why 10%? Why not 5%? If 10% is good, then isn't 5% better? Why 1 year? Why not 10? These are questions that only the free market can answer with the price mechanism. So, while everyone is taking to social media to cheer this socialist price control, which that's what it is, socialist price control, allow me to offer the contrarian view. And before you dismiss me as being a shill for the banks and billionaires, hear me out, because I have a theory as to how this will potentially lead to government-funded bailouts or financial repression through some sort of central bank digital currency program or individual accounts with the Federal Reserve. First off, why are interest rates on credit cards so high? Well, the main reason is that they're a form of non-collateralized debt, which means that they're very risky. There are no assets or any type of collateral that they can recover in the event of non-payment or default by the borrower, like a mortgage or auto loan, in which case they can repo your car, they can take your home to be resold, but there's basically nothing they can do to recover their losses. Credit card companies also cover insurance costs for many different services, like fraud protection, usually providing zero liability to borrowers for unauthorized transactions. They provide forms of purchase protection for damaged or stolen goods. And they offer various travel insurances for things like liability protection on rental cars. Credit card companies have incentive programs and rewards like cashback programs, and many cards offer those incentives without any annual fees. Now, interest rates could also be high because there's such a tremendous amount of debt. There's $1.23 trillion in U.S. consumer credit card debt. Higher rates are usually a signal from the market trying to encourage people to borrow less because the debt is so high. Now, less borrowing would help with lowering inflation, which is the main driver of the unaffordability crisis in the first place. Now, what are some of the unintended consequences of these rate caps? Now, the biggest concern will be the elimination of credit for some borrowers, especially ones that this price control is intended to assist. So, Brian Shearer, the Director of Competition and Regulatory Policy at the University of Vanderbilt's Policy Accelerator, he drafted a policy paper in September of 2025 advocating the benefits of a 10% cap on credit card interest. Now, he argues that credit card companies can absorb the hit to their profits because they've just made so much money that they can take a hit in a 10% cap. However, in the paper, he acknowledges that people with subprime credit scores will likely lose access to consumer credit markets, and many borrowers will lose many rewards and benefits such as cashback programs. So another unintended consequence will be increased annual fees or potentially new fees for cards that never required a fee in the first place, which this will just be another cost added on to many that are already living paycheck to paycheck, and even some that are relying on these lines of credit just to put groceries on the table. food on the table, groceries on the table, whatever. But lowering interest rates will also potentially create additional inflationary pressure, as inflation is created by the increase in the supply of money and credit. So for some borrowers that can afford it, a reduced interest rate will be incentive for them to borrow and consume more inflationary pressure on a market that's still battling inflation that they can't get back down. Well, now that we've covered that, let's get to my speculative theory on how this will backfire. So let's say Trump and the government impose a 10% cap on credit card interest rates. Now the market response is excessive fees for credit cards and many young and high-risk borrowers being eliminated from credit card eligibility completely. Now the young and high-risk borrowers face the issue of being able to not establish any credit at all, adding an additional barrier to the entry to the housing market on top of persistent inflation problems and a job market struggling to offer high wages. Now the government will emerge again with a proposal to the credit card companies. They will guarantee the loans to younger or high-risk borrowers, essentially putting the taxpayers on the hook and paving the way to a credit card company bailout. And when the people object to the bailout, they'll be told they're too big to fail. Another scenario will be a similar problem involving lost access for young and at-risk populations, which will again lead to the government emerging with a solution of some type of Federal Reserve bank account or government-created credit card system. Maybe even open the door to a central bank digital currency solution that will be sure to lead to financial repression. But at the end of the day, this is economic central planning by the government, which is socialism. Now, I believe in free markets, a decentralized system that lets interest rates set themselves and allows lenders and borrowers to interact freely and on their own terms. Now, who knows what will happen, what the results of this policy may be. As always, I hope that I'm wrong and my concerns are unfounded. But if I'm right, this won't end well. I'm always concerned when there's bipartisan support in our government on anything. Thank you for listening. Please like, subscribe, and comment. Have a good day.